up and running now. Let's see. All right, yeah, I think we're moving now. I think we have liftoff, as we would say, right? Let's see here. All right, so I see all my metrics are starting to show out now. So I actually do see the live stream now on YouTube. So we had to do a little bit of adjusting there, some technical difficulties, right? YouTube and all these little ins and out that it has. All right, so let's see. Gonna give a second here. Come in again. This is kind of impromptu, a little session here, nothing necessarily over the top. I know you guys are busy with the evening here at this point. You guys have families, this, that, and the third. So you're trying to, get your evening started. As you can hear my background, it is family hour at this time of night. So you're gonna have to bear with me a little bit there. More so, I just kind of want to come on and just discuss a couple things here in relation to trading. Obviously, the goal is to be able to, come back on regularly, like I was doing at some point here, and have some, if I could, some daily sessions, and being able to kind of game plan day over day, going into the market the next day, how we can, look at it from, geopolitical perspective, any particular, stocks that may be of interest to you, earning plays, things of that nature that we're constantly trading and sharing information with one another day over day. And so I just thought it to be, it was just a very useful opportunity here to come on and discuss a basic understanding when it comes to, what it really, what it entails to really understand what day trading is all about and pretty much how it works. And along with that, what we find a lot of people struggling with is, position sizes, right? How to scale into their trade properly, how to also, even put a perspective in place of how much capital they should be exposing themselves to the market with, right? We've had scenarios where people obviously, kind of going a little bit overboard. You have a big margin leverage account, and if you're not necessarily scaled properly from the size value of your account, typically the golden rule is you don't necessarily want to trade no more than 10% of your actual trade account, buying power value, right? So that way, at least you kind of stay within a safe zone and not overly leverage yourself, unless you find that home run trade where you can just really maximize it. Outside of that, you want to trade with a better, risk versus reward ratio, or have better risk control and or risk management, right? You guys heard me speak about that several times before, so it's nothing new concerning that. And so again, just want to come on, do a little quick little sound. I'm not going to be on long, but I am going to discuss this topic, and then I'm going to follow back on it again tomorrow. And so we're going to discuss this, actually the same topic again tomorrow, but a little bit more in depth, right? I do have my my points of references up, my data sheets, this, that, and the third, book references as well that we can kind of pull from to have an understanding of what exactly I mean when I say, or just basically what the industry standard is all about when it's, getting you to understand how day trading really works, and then understand how you should, properly position yourself in a trade, right? So again, we'll find ourselves somewhat, caught up in the moment, as we say, when FOMO grabs you, and you'll find yourself adding to a position more or less, right at the gate in a big value. And if the asset for any reason goes the opposite direction which you're trying to go, and if you don't have a stop loss set or things of that nature, it can get out of control really fast, right? It can become very problematic in a matter of seconds. And when we say seconds, we're definitely meaning nanoseconds. All right. So again, just want to share that with the family here. In essence, to just kind of have a natural conversation about, the parameters and things that we need to kind of be aware of when we're trading the market. And in the aspect if you're trading equities, obviously from a common share standpoint, that's where you kind of really put yourself at this, more of a risk exposure within your account value. So, making smart decisions is just uniform to obviously being a profitable trader. You have to have that boundary. You have to have, checks and balances to kind of make sure that you're maneuvering in a way where you're responsible to what the market is presenting to you. And so what happens a lot of times, you'll find those scenarios where it seems like the most ideal trade. Everything seems to be kind of, looking just wonderful and beautiful. And before you know it, things can happen and it'll throw a monkey wrench into your plans, and you'll find yourself kind of, backpedaling a little bit, trying to salvage basically what you was trying to do in the first place, and obviously getting a profitable trade, and it's the opposite direction. And so hopium kicks in. You start telling yourself the stock's going to rebound. Give it a little minute, it's going to turn around here, and before you know it, you're down, $50, 30 bucks, 60 bucks, 70, 100, whatever. And before you know it, it can be very again problematic in terms of your P&L. And so again, knowing how to position yourself properly, again, is just one of those key metrics or dynamics, and being a little bit more staunched in the way that you should trade anyway, right? Very stingy, so to speak, in essence to the market. As I always tell people a lot of times, you have to look at it from this perspective. The market has to earn your money, right? It has to earn the right for you to submit your money into it. And this is to, have that kind of, even exchange, right? Quid pro quo kind of reality, right? Something for something, right? We don't want to be the type of, person who constantly gives to market and the market initially doesn't give back. Again, it's a marathon, not a sprint. You will have your ups and downs. You will have moments where you're, caught in that perpetual value of trying to, get your footing underneath you. But overall, when the reality of it really sets in, and you really figure how to quantify the market in a way where you're not necessarily chasing it, right? But it is chasing you, so to speak, because you're doing so good. It's trying to obviously, reveal to you everything that's necessary for you to be profitable. Then that's when you're kind of on your way, right? So again, I just want to speak from that positioning, because it is a process. It is a process. And just for you guys, now I know maybe a few of you guys probably hanging out with your brother here. This video is actually unlisted, so that's why we don't have a flux of people coming in. I did it unlisted purposely, obviously, for a training session that we have through our WeTrade HQ mentor scenario. But I want to open it up to specific people in the family here, because again, I know you guys are adamant in in your growth and trying to understand how to be better as a trader. So I wanted to take that time to kind of give, pay it forward, so to speak, and share it with a couple other people. And it was very impromptu. Like I said, I didn't pre-warn anyone like I normally would. That way you have time to kind of, find the time to meet up with us for the Foster live stream. So, again, I didn't plan to make it a very lengthy conversation, more or less, and in depth in terms of training. But just to set the stage for tomorrow, so to speak, that when I go live tomorrow, these are things that we're going to discuss, and we're going to discuss them in depth, like I said before. So kind of like a precursor, right? It's the appetizer before you have that that 6-course meal, so to speak, right? So you got your little your little croutons, and you got your little bruschetta, right? A bruschetta, depends on how you speak. Right? You got your little fried, little whatever you eat, mushrooms, asparagus, or whatever. Either way, again, it's just a conversation piece. So to again set the stage for us tomorrow. So again, when we talk about, or when we speak about, what it takes to learn how to day trade properly, right? And pretty much how this stuff works. Again, we're coming from a perspective where There's different types. We know there's intraday trading, there's swing trading, there's long-term based trading, there's dividend trading. Is you can trade ETFs only, mutual funds, options, whatever. But ultimately, when we put it in, again, layman terms, we're just trying to figure out, how do we function from one trade to the next? How do we assess our situations, going into the market from one situation into the next. And so coming from the book, How to Day Trade for a Living, all right, I'm really going to hammer that book a lot. Forgive me. Really going to hammer in on that book a lot here in this the latter part of the month of February going into March, because it has a lot of very useful and practical use cases that you can kind of see yourself in these moments, and how it'll help you, become a better observer of what you're doing, observer of the market, and everything that surrounds, this craft as trading. And you understand that this is pretty much an art form in a sense. Trading is very much art, if you ask me, in its own right. The patterns, the trends, the ups and downs. Again, it's another form of that kind of value. And so, speaking about things when it comes to understanding how day trading works, I think it's very useful that we kind of not put the cart before the horse, and kind of back up a little bit and realize the value of what something as simple as day trading and swing trading is all about, right? You may have people who are very knowledgeable in the aspect of how they trade the market, but every instance of trading the market may necessarily present a day trade. It may carry over into a swing trade, right? Every position opportunity, may sometimes, seem to be a perfect buy and hold situation, may end up turning into a day trade, because you may have to, get out of there early because of, some abnormal news came down, anomaly, so to speak, something that you didn't plan for, and it'll force you out of the position. Hopefully we want to have things, fail-safe mechanisms in place, somewhat like a stop loss or something like that, or even a trailing stop if you kind of in profit value and just want to, obviously kind of, keep, accruing, gains as the asset continues to go up, or obviously it's coming down if you're short selling. But either way, you want to have those fail-safe mechanisms in place to protect your backside and your upside, basically. And so, again, coming from the place where we're just speaking very general here, when we're speaking about again, day trading versus swing trading, buying long, overselling short, right? Again, another conversation. Retail versus institutional traders, right? Us pretty much against the big boys, the hedge funders, right? The JP Morgans, the Barclays, the Stifles, the whole gauntlet of you guys, who are, have been in the market a little bit long enough to understand how that works in terms of institutional traders versus retail traders, right? So speaking about that in depth, to going over that so we can really break that down, right? And then lastly, how do you determine what retail traders are focused on, and your place in this, pretty much in this, this huge playground that we kind of go in and out of every day, right? I definitely liken the stock market to a playground in some aspects, even though it's serious business. But it's an unlimited, utopia of opportunities, right? The same with that a kid, when they have been locked in the classroom all day, gets to go outside during recess, how they find, this kind of larger than life experience when they're cut loose out there into that jungle gym. And all the different things that they'll be able to experience, from the sensories that they're experiencing, from the weather to the mechanics of the equipment that's out there, interacting with other kids, or this, that, and the third. Again, it's just a wonderful experience, and they can have good experiences, and they can also have bad experiences, right? Either way, you go into that opportunity in most cases with wide eyes, and you're excited. And so depends how you play out there will be determined of how how well you really absorb that moment, right? You kind of in your moment, so to speak, right? And so that's what this aspect of how day trading works really entails, and what we're going to discuss more in depth again tomorrow. We're going to break these kind of bullet points down strategically, and how they will relate back to the common and average trader, obviously myself and you guys, right? And so, we'll have a better way of assessing ourselves, as traders, right? So we don't lose focus and lose sight of the kind of things that will help us be in a position to make good decisions. And so that's what it really boils down to, making good decisions. Even, again, like I said earlier, when I premised portion of the conversation based around, scaling profitability, the value of proper positioning, scalability, and how that relates again into profitability, right? So, that's another conversation that we definitely need to speak about, because I do find it, kind of, I guess unnerving when I hear people say, well, I took a position on a trade and, I really felt this kind of way. And, I kind of, got excited, and I kind of went to tapping the button a little hard. Next thing you know, I was up, 2 or 3,000 shares in a trade, when normally I would have only taken like 500 shares, right? Or 700 shares, even 1,000, if that's the case, if this trade is really kind of, setting the kind of tone where it's worth that trade. And before you know it, things happen, right? The market shifts, or the asset does a 180. And again, they had, no stop loss in play, or anything things can happen. Again, a distraction can happen, or emergency thing, something can happen. And before you know, you have to jump up, you have to run to get something or whatever. And that trade does a 180 on you. And again, before you know it, that loss is starting to just multiply, because the aggregate value of shares that you have obviously presents a bigger deficit if it's already in the negative. You're talking about taking a small bite of one of those big Texas sized hamburgers, and it's like you barely even do a dent to it, because it's so big, even with a big bite. But if it's one of those little what do you call the little small hamburgers, the little the miniature hamburgers, what are they called? One biters, or whatever they're called, whatever, y'all know what I'm talking about. You bite that thing a little bit, one bite, and it's done. And that could be the same for the value of our accounts sizes, in terms of being overly exposed to the market. And when you're in the negative at that point, you have so many shares aggregated into the market, that loss is just larger than life. It's like, wow, before you know it, $100, $200, $300 is gone before you know it. And that could be, again, also become problematic, right? So again, just from, from those topics, those are the things that, again, we're going to be able to discuss, that I would like to definitely discuss, and from there, we can keep building upon that. It's kind of like a book club, right? But for traders, we see this as another form of, Q&A, a little bit of, recon, so to speak, in the market, kind of doing, a little, corrective, conversation, so to speak, going over the market, assessing the details, what happened, what we could have done better, and how we position ourselves going forward, right? So that way, you always have that thought in the back of your mind, hey, this is not a game, this is serious business. Obviously your money matters, your time matters, and also, everything that you're doing to make yourself, better in this craft, in this field, will not be pretty much done in vain, because you're actually putting forth, everything it takes to be solid at this, right? You're actually taking it serious, right? And from that, again, you'll find that over time that you'll get better, as you progress, because you're doing what's necessary to keep yourself in the game, right? It's not as a walk in the park. It does require a lot of attention to detail and discipline, right? And again, we know, again, even the greatest of them all take L's. In case in point, some of you guys might have saw the article that I posted earlier this AM. Warren Buffett took a $4.3 billion L last week. He took a $4.3 billion L last week. So even the best get hammered. That Kraft Heinz trade did him in. He was very exposed, or overly exposed. Some of the stuff that we're talking about tonight, in Kraft Heinz, right? Kraft Heinz, the company, Kraft and Heinz, obviously, they merged. Kraft products, the macaroni, cheese, the dry stuff, right? And Heinz ketchup, all that stuff. Company been around for a long time, but obviously both before they actually merged. But either way, they've been around for a long time, so people know what they're doing. But obviously, there was some very, scathing news that came out concerning that company that caused it for, FBI investigating them. And again, they had earnings on top of that, which reveal this flaw that they had, in the company, which caused the stock to, or investors to react to it very negatively. And hence, you had that domino effect with the stock that sold off, dropped from, well over like $46, $47 a share, all the way down to like $35 a share. I think today it ended up around like $34, right? I had a position on it, obviously from a trading perspective and trading it, and trading, and again was able to kind of capitalize on some of that. And weird as it is, he had an interview today where he kind of came out and spoke a little bit about that scenario, a little bit, a toxic value. But I guess what I'm saying, anybody in this field or this industry can get it. When I say that, I mean they can take an L. So that goes to show you it's not an exact science. No matter how much money you have, how skilled you are, experienced you are, your team, and you have the best, algorithms and computers working in your favor. That's all that stuff matters not, because again, the market is like the customer service representative, right? When they are trained to be professionals, right? The one thing that they're taught above all things is that the customer is always right, right? And so, with that kind of mindset, even though we know it's wrong, it's manipulated, or it's you can tell that somehow things are just not right. Well, it's not necessarily you could do a whole lot about that. Again, there has parameters to kind of protect the investors from, obviously manipulating opportunities that, these companies take investors through, and insider trading and everything else, the company not disclosing the proper information so you could be well informed about, the position you may or may not want to take. That stuff happens. And again, the lawsuits and the SEC gets behind it. We saw what happened with Tesla, right? The whole 420 scenario, funding secured, how you got in trouble with that. But ultimately, again, it's still up to us to protect our backside more than we're having to depend on the agencies to kind of police us and police these companies. Excuse me, I should say. And so again, saying all that, it's just another opportunity for us to realize that this is on us. At the end of the day, everything we do, everything that we position ourselves for, it falls back on us, right? And so again, that's important. And so again, just touching on those topics, I want to discuss it from a very, basic understanding, so we can, see ourselves, again, as the vanguard of this opportunity, to see ourselves from a longevity perspective, where we can see ourselves doing this, at a high level too. But it's going to entail us being able to, take some bumps and bruises along the way. And obviously, it's not always perfect with me. I've taken my lumps like anybody else. But one thing I do realize about this is that, the sheer opportunity that it provides, it has no equal from the aspect of the privilege aspect of it, right? Given the opportunity where if you perform properly based upon, what everything is setting up and exposing to you, then you don't have to worry about having to go out there and deal with a lot of things that really put you in an adverse situation, and I mean, you guys kind of get to understand what I'm saying. You can do this from a comfort position if you are more well-rounded in understanding what this craft is all about, right? Taking the time to really learn it, and then go execute through it, and then reap the benefits thereof. And so anywhere around the world, doesn't matter, laptop, cell phone, computer. Y'all heard me say that I can use it anytime, the whole spiel with that. knowledge and some capital. And even if you are a career-minded person, and you can do this in your in part-time value too. Again, that's the whole purpose of why I said how day trading works. Because again, you don't have to be a day trader. It's exhilarating, it's fun. You see other people doing it, it's like, man, I want to do that too. But you can do swing trading, you could do quarterly based trading, hold an asset, from one earnings report to the next, right? Bottom dip based buying based trading, catching stocks that's been highly oversold, and then waiting for the new catalyst to come along, new volume to come along to kind of catapult the asset back up a little bit. And again, you coming in at the very bottom, you look, you say, well, it's nothing but up from here. And you could take advantage of that, or you could be the kind of short seller, right, that that goes out there and scouts for stocks that are pretty much overbought, right? They're constantly trending well above 70 plus on the RSI, the relative sliding index, to say that this stock is just kind of overbought at this point. The demand pretty much for this asset is slowing down than that of the supply, and based on what's going to happen at the point, it's going to actually hit a brick road, and it's going to pull back, right? At some point, it's going to kind of sell off a little bit, right? Because again, nothing just goes straight up. I know bullish traders would love for that to happen, but from a responsible mindset, we know that's just not plausible, right? It's not plausible. And I know no professional trader that will even move under that thesis that, if it's up today, it could be up tomorrow. And if it could be up the next following day and after that, that's just not true. It's just not true. And so we don't want to get caught up in delusions of grandeur, right? We want to move again under the mindset that we are responsible in making good decisions. And so that's why, again, I want to kind of premise this, the title, how day trading works, and also learning how, to position yourself properly, when it comes to scaling into a trade, or even just taking the initial trade out the gate, so you don't necessarily find yourself being overly exposed. And I'm speaking strictly from experience here, right? Because I've had, again, my moments like anyone else, but within that, you learn, you get better per every opportunity, right? And some things, again, outside of your scope, things do happen. The market could just, whatever, or, emergency things could happen. But, in any moment that you have to protect yourself and protect, your value in this opportunity, exploit all those ramifications, right? Go through the gauntlet, figure out, what you can do, whatever you can do to make sure that you're not out there in a way where you're just overexposed, right, to this market, right? And size of your trade, and being in the wrong trade, following other people, FOMO as they call it, fear of missing out, or the opposite of that is what they call FOMO. I don't know if y'all heard of that one. FOMO, right? Yeah. Right. My accent may be different, so like FOMO, like almost like foam, but with the L on the end. Foam. They call it foam, though. I should say, excuse me, foam. Was basically meaning fear of losing money, right? FOLM, right? That's another one, right? And because you have that kind of, very, very, skittish disposition when it comes to that. You may be up in the trade, because how many times you've heard people say, man, I got out too soon, right? I kind of left the trade a little too soon, and the trade is obviously still running. And in that moment, the first thing you should do is stop and say, you know what? I'm thankful, I'm grateful that I was able to profit something. And I know it sounds, all in hindsight when you think about it, or just, but ultimately, it's a sign that at least you was right. At least you made the right and correct decisions to put yourself in a great trade out the gate, which also turned to be profitable. If you leave it a little bit on the table, that's fine, right? If it goes and just runs up another 3, 4, 5 points or something, yeah, that could be a little sickening. But here's the great thing about a trade, especially if you don't have to deal with the PDT. But either way, the same way you got in and got out of the trade with a profit, you can always get back in. But I would say once you return back into a trade that you was in earlier, that you was able to, assess it and make a good decision in, now you want to look at it from a place where you come in, you go in the next time with a little bit more a little bit more caution, right? less exposed to the market because you don't want to give back that what you earn. So you may come in next time with, less shares, this, that, and the third, enough to kind of just test to see if there's any more meat left on the bone, right, so to speak. And so again, that'll help you to be able to make the kind of decision again based upon being able to retain what you have, as opposed to obviously always exposing what you've just been able to kind of pull away from the market, right? So the goal is about retention. It's not about just any little moment that comes around. You just want to give everybody give everybody all your little gains and all your little money, right? No, the goal is to retain. So it's about base hits and not home runs, right? You guys have heard me say that a million times. It's about base hits over home runs. It's a marathon. It's not a sprint, right? And again, knowing that and trading under that mindset will help you to become a very, very profitable trader. And when I say profitable, you don't have to always be aiming for the stars and the moon. It doesn't have to be $1,000 trades and $10,000 trades. Again, y'all seen people tear it up, whatever. But whatever works for you and your comfort level, that's what matters most. That's what's going to keep you here for a long time. That's what's going to help you to be able to transcend bad money management values, or help you with your discipline value, help you, to become better at quantifying information and data better, right? Because as I've always said plenty of times, basically what we are, we're just data chasers, right? We're data collectors and data chasers. So information is king in this industry, right? You cannot be successful as a trader without understanding that this is a paper trail, so to speak, a paper chase, so to speak, in a lot of ways. You have to be serious about, due diligence and getting the best reference information, source reference information than that of what your peers may be able to do, right? Because if you're well informed, that puts you at an advantage, right, over those who are uninformed. And so, as we do know, anytime someone makes a profit in a trade, that means someone is losing. It's simple as that. Someone has to lose money in a bad trade in order for you to make money, right? There's no stalemate reality in this. If you submit your money, it's only so many shares on the float that can be traded. And within that, it's a tug of war, right? It's those who are shorting against the stock and those who are trying to go long in the stock, so to speak, right? And whomever controls the greater battle of that tug of war will be the victor, And also, even within that, those who realize that the battle is won and release themselves from that fight will be the ones who secure their bag and move away without, always having the issue, where they'll go through all that fighting to get the battle won, and then they just turn around and lose it all, right? In the end, or they walk away kind of like, somewhat of a stalemate situation, right? And so, again, that's just another part of the game too, because you're trying to obviously, be the ones who assessed it first, saw this coming, already set your target value, what you're trying to get out of it. And once you hit your goal, you accomplish your goal, you're done, right? You're out. Again, like I said before, you can always go back into a trade, but the goal is to walk away from the trade profitable, be an effective trade. So again, just another part of what we're going to discuss more in depth tomorrow when we actually break this discussion down in depth. We're going to, again, be a little bit more lengthier with this conversation tomorrow. It's going to be like, how I typically do my little sessions. We're going to, bring up some data, some reference material. We're going to apply it back to the charts. We're going to do, question and answers as always. But we're just going to set a template. Like I said, we're going to set a template where, we're going to be, again, doers you know, of building this reality to our liking. And you know, from that, it's going to require attention to detail. You know, simple as that. That's what trading to me really entails. It's about attention to detail. If you're a detail orientated person, right, then you should do good at this if you really take the time to really learn it properly, right? And again, ebb and flows, we understand it. There's a lot of snares, roadblocks, obstacles here and there. I mean, right now the geopolitical climate is just a mess right now. You know, you don't know one day if we're going to be, dealing with the tariffs, or if it's not that, if it's not the wall, if it's not that, it's all this, this, pre-election climate and conversations that's coming behind that, and how it just, has the market right now in the flux in a lot of ways too. But more so, again, it's still just an opportunity where it's, if we learn how to read it properly, as they say, read the tea leaves, right? If we learn how to read those tea leaves properly, we'll still know how to side or err on the right side of the market, right? We'll be able to, make the right and proper decisions based upon what the market is offering us, in that moment, right? So, and that's what all this is all about. Again, it's about being able to quantify and slow down the market. I make the reference to, it's like Neo in the Matrix. When he figured out that he was the one to stop fighting himself or doubting himself, he allowed, everything around him just to, pretty much come to him at that point, as opposed to him going out and searching for it. So again, these, always odd and weird little analogies, but they make sense in terms of what we do. It's understanding where do you fit in the grand scheme of things as a trader, as an investor, right? And we know there's a difference between a trader and an investor, right? Again, because we just spoke about day trading as opposed to swing trading, right? Momentum-based trading as opposed to, dollar cost average and value investing, and then the different many facets underneath that. Options, again, ETFs, dividend trading. It's so many different ways you can trade. I mean, there's different asset classes altogether. Crypto, we know about that. Forex, another value of trading. Binary, I mean, you name it. Ultimately, again, it's just the opportunity. That's pretty, pretty exciting. Being a part of the opportunity, right? That's what's getting, that will get you, riled up. The idea that, okay, today might just be my day. Today I'm about to go in here and pay the house note and the car note off on one trade today, right? The market, when did the market get a hold of me, right? That kind of mentality, right? And that can, and that's very doable. It is very doable because there is no cap, there is no ceiling, there is no set value that you have to really adhere to. And being able to obviously have the opportunity to present it, so you can actually engage it and benefit from it. And so, with that being said, again, it's just an idea. It's a thought. It's an opportunity, and it's up to us to again take it serious so we can benefit from it, right? And that's what it's all about at the end of the day. It's like I said before, it's all about the opportunity. And the opportunity is king or queen, right? Depends on how you want to look at it. It's not a misogynistic view, right? It could be queen if you take the necessary steps to do it properly, right? Take the necessary steps, right? Make it matter, make it make sense to you. Align yourself with other people who are doing, what you're doing, and then just go out there and have fun at it. You should be able to have fun and make money at the same time. There's no rule in universal law that says you should be miserable in making your money or getting out the resources, right? That to me, that's like who would want to, be a part of something like that? So, I will say this, definitely, unequivocally, have fun and make money. This can be very exhilarating. It can be stressful at times too, very stressful. So to speak. But I would say this also again, you also can have a lot of fun doing this. You also can have a lot of fun doing this, guys. And if you take it serious, and you go the distance. You allow yourself to be, have the proper patience to walk into this opportunity as opposed to running through it. Then you'll thank yourself later. You will thank yourself later. I guarantee you will thank yourself later, right? Because again, it is a marathon and it's not a sprint, right? Right. So that's basically the gist of what I want to kind of come to speak about. Again, this is not, an in-depth study which we're going to do tomorrow. Tomorrow's going to be the actual, the breakdown, the digging and the jackhammers and the nails. We're going to chisel this thing down. We're going to bring up the data reference points. We're going to pull up the sheets. We're going to pull up the charts. We're going to break this stuff down. We're going to make it make sense to you guys, right? Again, we're going to take it, the full length of the conversation, which gives us more meat to the topic. So again, understanding how day trading works, also proper positioning and scalability, right? Again, going back to some of the basics. Let's go back to the basics. Learning how to know who you are in the grand scheme of this market. What kind of trader are you? Are you better at day trading, momentum-based trading? Are you better at swing trading because you have a career outside of this that takes a lot of your time, right? Are you better positioned to kind of do some value-based investing, for dividends or quarterly aspects of the fiscal, biannual, and also annual-based trading? If those are some of the things that kind of fit your criteria when you kind of do an assessment of where you are and who you are. Some people don't have the nerves to deal with day trading. I've had people come like, man, your training is like awesome, but man, I can't do that day trading, man. That still work my nerves, man. And I'm like, I can respect that, because again, it does require, a lot of you. It requires a lot of you, in the sense that, no one can sometimes, you can never get comfortable seeing yourself like right on the edge of opportunity, right? And before you know it, you kind of like out of that opportunity, or you get into opportunity and you have that deer in the headlights moment, the analysis of paralysis, right? Or paralysis of analysis, whatever. And then what all that you was able to kind of garner, you'll turn around and give it back, right? Because you refuse to hit that sell button, right? That sell button became anti you. It's like sitting there looking like, don't you tap me? We're gonna go higher. But in that moment, again, you understand discipline, will trump and win the battle in the end if you really, really know, your end goal, what you're trying to accomplish as a trader, and again, you play no games when it comes to saying, I stand on this and this is what I'm going to do, right? Learning how to convince yourself that you have to be able to learn how to walk away, one way or the other, either with the bag or sometimes even holding the bag. Right? More so, hopefully, you're getting the bag, securing the bag, as opposed to holding the bag. But that, again, also is a part of understanding discipline, right? And, your due discipline, excuse me, your new word, due discipline, right? Your due diligence is also prerequisite to even building up a strong discipline. Because when you feel comfortable about knowledge and information, you will act on it, better. You'll act on it, properly. You're not going to go out and make a half-cocked kind of, decision or a move, so to speak. You're going to think about it. You're going to think it through, right? Which what we're supposed to do, right? Critical thinking, right? You're here to be a critical thinker. You're not here just to kind of move on emotion, right? Emotion gets us in trouble, right? And so that's just one of many facets. Again, like I spoke about earlier, and becoming profitable, becoming a better person, becoming a better trader. Period. And so we don't want to lose sight of that. We constantly want to, beat that dead horse, so to speak. We're going to whoop that dead horse every single time, so that way it stay down, because, we're trying to, establish a legacy. We're trying to, hit some goals, so to speak. We're trying to, be forward thinking. And that's how we, compartmentalize our you know, our monetary value for our bigger endeavors, be it, you know, real estate, and you might want to, you know, you might be a person that has other business out there and you want to be able to fund it and fuel it and this, that, and the third. Well, again, we know the market will help you be able to do that, right? It will definitely be able to help you do that if you adhere to some of the basic rules and principles about, you know, this market as a whole. If you can do that consistently much as possible, your win rate ratio will be a lot better than your, you know, your loss value. And again, I know it's a journey, guys. It's a struggle sometimes, right? We all go through it, right? You get beat up, you get knocked down, you know, you like, man, I'm done with this, and you know, this, that, the third. But just do realize, you know, nothing comes without the proper, you know, number one, education and proper discipline. And so, you know, don't look at yourself as if it's something wrong with you, to the tune where you kind of, you know, talk yourself out of the opportunity, right? More or less, just try to understand how you can kind of, maneuver with the market, right? You're just trying to maneuver with the market day over day, or, you know, long-term investment over the next, right? And if you can do that, then I think you'll do what is necessary so you can be profitable, right? And we can break that stereotype, you know, where they say, right, only 90% of traders fail, obviously, and 10% obviously are profitable, or they make money. Again, we've all been in a position where you had a big bag and you may have been taken it at the time you should have, or, you know, vice versa. You was in a bad loss, and before you know it, the thing turned around, right? Some grace of the stock gods out there, right? They spoke and said, you know what, I deem this trade, you know, able to, and from this point forward to turn around. And before you know it, the stock can turn around. Now you up, you know, 60, 70, 80%, 100+%. You're like, what just happened, right? Or you get caught in a buyout, whatever, right? And you bleeding on your little stock options, right? You may have 3 or 4 days before this, the asset expires if you're trading options, and lo and behold, you get news, oh, the company's getting bought out, right? And I can say that unequivocally because I've been in that situation before. And just as a sidebar, the stock, you know, ONCE, ticker symbol ONCE, once, right? Sparks Therapeutic, right? I was looking at that same stock literally Friday. It was, you know, within, you know, my scanner. And, you know, obviously I didn't have any inclination that it would, you know, do that. Now, I was a big biotech trader back in 2017. Now, I still traded, but I wasn't as, you know, into it now than I was back then. But, you know, had I been on top of my game, not only did I see that stock Friday, and I kind of looked over it a little bit, and I was like, okay, I'll move on to other stuff. You know, if it was in my mind how to check, you know, the fly or any of these, you know, biotech breakouts or biopharma site, and I saw that they had any kind of specific rumor news coming around the pipeline, then I probably would have took a position on it. But who knew? Again, woke up today and saw the news that, you know, they're getting bought out by, you know, this company. I'm like, wow, you know, by Roche, right? Roche, and they bought them out, and over 120 or 20% premium. Like, who wouldn't want to wake up to that kind of bag, right? Like, man, you know, I mean, the stock just, you know, like, really? But that's what makes this stuff exhilarating. That's what gets people excited about it, you know, moment over moment. And that's what makes us stay, you know, grounded for that unknown, right? It's the unknown that pulls you back day over day to this opportunity, right? Because again, you can say, well, you know, today I only want to, you know, be fortunate. I hope I'm fortunate to, you know, make, you know, 10% of my, you know, allotted value that I'm willing to put into the market. So if you say I'm only going to risk 10,000 today, I just want to get, you know, 10% of that, right? And so, you know, if you say, well, if I'm fortunate to be able to get 10% off 10,000, well, you know, that's $1,000, right? It's a lot of money, right? And, you know, but that could easily turn into what? A 20% gain, a 30% gain, right? A 40, 50, 60% gain. Who knows? We've seen things happen, right? And so that's, again, the thrill of the chase. And so, but more important, again, just having, like I said earlier, having those disciplinary things in mind. And so you don't kind of get ahead of yourself. Don't try to put that cart before the horse, right? Don't try to reinvent the wheel. As I always used to say back in my former corporate days when I was doing marketing, international marketing, I said, you know what? You don't have to try to reinvent the wheel. You know, just personalize it for you. Put some umbrella on it, shine it up a little bit, right? You might be a white wall kind of guy, right? You might just be, you know, rarely, you know, GT type tires on there, whatever, but again, as long as you personalize that thing for you, that's all that matters at the end of the day, right? That's all that matters, right? Learn how to personalize this market to suit, your need, your view, your vantage point, again, so you can feel comfortable when you go into it day over day, right? And that's what I love about this, because it's you against the market. Let me repeat that. It's you against the market. And that's how you should view it. It's not no more than that. You're trying to go into it, figure out the weak spots in it, strategize, capitalize, and then you get up out of there, right? It's simple as that. Look at yourself like a Lone Ranger or a soldier. You want to jump in there, mash the gas pedal, get what you need, and you get up out of there. All right. So again, it's just as simple as that. So again, just want to put that out there again. This video again is not public. It's a private one. I did it public. I may share it live. I might make it private after I end it. But I just wanted to have a small little impromptu conversation. I shared it with a few little rooms here and there. I didn't go overboard and hit it and share it with everybody. But I just wanted to kind of find that one or two people that may be out right now who might have already been studying for the market for tomorrow, who may have been contemplating certain aspects of the market, who may have had questions about where do they fit in the grand scheme of this opportunity as a trader or as an investor, and then kind of speak to you guys candidly or personally, right? Because again, I think the more you can have these kind of open forum discussions or more in depth, obviously when I'm doing proper mentoring and training, obviously that's my attention towards those people who are invested in me at that moment. But either way, you guys know how I am. I'm very giving. I'm a very open kind of person. I enjoy helping because again, as I use one of my famous lines that I like, quotes, is that by Robert Klein, is that when one teaches to learn, right? And it's simple as that. And that's how it should be. It's an even exchange. Excuse me. Right, in water. Right. So same way when you're teaching, I learn too. Right. Again, I'm always putting it out there where you guys realize that you got something to teach. No matter where you are in this journey. I mean, I don't never claim to know it on. I never will. And so I just enjoy information and what it can do in helping edify my knowledge space. Right. My repository of knowledge and information. And so I enjoy sharing, again, like I said, in that same right. So, but that's that, guys. So I do appreciate you guys stopping by and, hanging out with me. This was a very impromptu conversation, more or less. But tomorrow, again, I will be going in depth into this conversation. Again, I will be bringing out, the reference sheets, breaking it down. We're going to read through that chapter a little bit. We're going to go over again, proper positioning and things of that nature, so we can say, we've kind of had a chance to really break this information down. If it's going to help us to be better, then I'm all for it, right? And that's what this is all about. Typically, here at the end of the day, it's about again getting the best information, so you can go out there and execute properly, right? All right, so that's that. So again, I do thank you guys again for stopping by on this impromptu conversation. I know you guys are probably, got your evenings going. You probably got your dinner ready. You got the kids running around. People like, man, you cutting into my good time right now. I think it's NBA season, right? I think it's NBA season, so you might be getting ready to watch a little NBA game. You be like, man, I don't want to talk about the stocks right now. I need to be trying to watch this basketball game or whatever. But ultimately, I think this is a great, opportunity. So, we can come back and say, you know what, that was a nice little quick little discussion, or that was a good point of reference of information to kind of go over. And yeah, okay, I see a few people that popped up. Hey, what's going on, brother Jacob? What's going on, Jacob? What's going on, family Lee Turnbull? What's going on, family Brandon? See you guys in the house. You say what happened to Roku? Yeah, Roku hit that wall today, bro. They again had a phenomenal run off the earnings, right? We all saw the stock Friday. Asset just went hog wild, off its earnings report. even though it kind of opened up a little lethargic, and then it got legs after the fact. Obviously, excuse me, Thursday, and so Friday, when it opened up for the market, it grew some legs, right? In come all these new buyers, right? In come all these, all those kind of naysayer people who was kind of watching from afar and decided to say, you know what, hey, here's an opportunity where I can kind of get in on this price action, right? The price action went through the roof. The option flow chain was just, really revealing itself in terms of how many people had actually, saw the opportunity in the move, being strategic. I think they had like about an 8% implied volatility move on the stock going into earnings, somewhere around the 8 or 10%, which is a lot. I think it ended up going higher than that, obviously, because the stock went beast mode. I mean, it jumped up and ran over $20-something a share. Let that marinate. We had actually one of our guys that's a part of my mentor room. He actually got into the stock, I think, early in the week, maybe like Tuesday, Monday, whatever, into earnings. And lo and behold, he got a little, frustrated. Again, he didn't give himself enough time and allow the stock to kind of reveal itself. And before you know it, he sold his position too soon. Turns out the stock, again, ran up over $20 a share. And he left all that opportunity out, on the table. But that's a part of the game, And, when you do feel convicted about a trade, and, the kind of the stars align and the moon align with you, then, stand on that. Stand on that. And we know options a little bit more, a little different than trading the regular common equity stock. But either way, again, the goal is to, again, make good decisions based upon your due diligence, right? Your study value. Now, you put in the work, then trust yourself, right? Trust yourself. If anything, set a stop loss. Again, you might get hit with a theta burn and the IV crush you because after that earnings report is released, what it's going to do to the options market. It's going to cause that volatility to go haywire, and then it's going to fizzle out. And so if you're not obviously in the money or deep in the money at that time, that could be problematic to you if the stock obviously goes the opposite direction where you're at. But again, granted, that's a part of of what we do as well too, in terms of being able to make that proper decision in the option market, because it requires you to have that forethought, right? It requires you to dig a little bit more deeper and getting the best source of information that you can to take that trade. You've done the scouting, you've done all the scouring, and you read all the reports. You see what the analysts are saying. You kind of went through the chart like a gazillion times. You put your plots up there, your support resist. You got your Fibonacci bands up on it. You might be using a trend indicator to kind of let you know if you are actually in the proper trend. I mean, all the different things. Again, everything that we do in terms of being able to use the cheat codes and the cheat sheet to help us become, more comfortable and convicted in taking the trade. But when those things, again, align themselves properly, that's when you strike. And that's when you strike, and you just say, you know what, hey, I take responsibility for this moment, right? I'm going to own this moment. So, in that moment, the brother kind of cut, a little too soon. And then, the next day, his stomach was turning. I can only imagine, he was in, I think he was in around, gosh, I want to say like 40 some odd, 40, was it $42, $43 a share, somewhere around there. I could be wrong, but he was in pretty early, obviously. And again, I mean, you guys saw what Roku did. It was just some out of a, it was just some out of a movie, right? So I think he was in roughly around about, gosh, did he buy it the week before? He posted it to me. It was either 40, I think it was like $40-something, or he might have got in right around $50 a share, somewhere around there, give or take. It was in the low 50s or high 40s, I tell you that. Again, long story short, y'all saw what Roku did. Roku not only gapped up and went haywire, but it just went rampant. Ran all the way, ran up as high as like $6 to $7 and some change, right? You talk about a major move there, right? And so, again, just go to show you, if you go look at the chart now, it just looks like it's just, super bullish. Even today it pulled back some. I actually shorted into it today because, again, I respect the value of the extension. And anytime you see your extension, no matter, what kind of trader you are, you do realize that what goes up has to come down, or it has to balance itself off and level itself off. And that's basically what Roku did. So quick little moment, I'll share this with you. I'm gonna get ready to get off here. I got to go eat dinner. But if you look at that Roku, and this is just the daily chart. I just got the daily up, on the annual perspective. Where it came from, obviously, everybody got beat up on that December pullback, and since then everything has just kind of gone bottom out and just went stupid haywire. You're talking about a stock that came from $26 a share back on off the December lows, actually around $26 a share off the December lows, and now it's up here near $70 a share. You're talking about a gain of over almost $50 a share. That's the power of investing. Again, you could have threw a couple dollars in just off that low when it bottomed out around there, because we got an indication that the market was going to kind of get a boost, because we were hearing all the news behind the pump protection team, right? Steve Mnuchin and Larry Kudlow and the team that's pumping the market. They're trying to flood all this capital into the market. I don't know where they get this money to do it, but apparently they got some money to juice the market, and they just ran the Dow and the SPY up. The Dow, that was the day the Dow hit over 1,100 points in one day. Like they said, like in history, that was like one of the moments they ever have seen something like that in history. And it happened in a matter of basically about an hour the market went up over 1,100 points, somewhere other than that. So that was a buy opportunity. If you were shortening the stock at that point, that was the time to kind of cut that, take that profit and go long. And so those people, I can guarantee, that bought in at $26 a share, $27 a share, and they held number one because they might have liked the company, this, that, the third, but they got rewarded handsomely. Look at this chart, guys. Look at this. They well over $40+ a share right now in this trade. Especially coming off the back end of the last earnings report that just came out. So they got a nice little popular retreat, and it's actually now again well above the 200 EMA, right? The 200 EMA here. I should have put up the 1,000. I got a 1,000-day moving average. I put up every night there, and you kind of see how it fares on a 1,000-day chart. But I mean, again, it clears some key levels of resistance, right? It cleared some very key levels of resistance, right? And now it's sitting very in a very demonstrative state. As long as it stays above this I would say at least this $60 handle at this point. If it stays above the $6 handle at this point, it could definitely find itself going back and potentially testing the highs of last year, roughly around there, over $75 a share. Again, so I got short on it again today around about 66 something. I got short on it. Matter of fact, where I'm at, I got short on it at 66.77. So right at 66.77, I got short on it. Again, finally, I'm swinging it actually. I am going to swing it, as you can see here. That's why I held it overnight. But again, it's going through that that pullback. Let me correct myself a little bit here. Let me get my bearing, and then it may still make a run tomorrow. And what made me feel comfortable is the fact that when the SPY began to retrace again off that crest, right, it made that peak, and then it came back down to the valley lows, right. It closed the gap basically. The market gapped up obviously through the futures market Sunday, based upon the news with Trump, and this whole tariff delay, extension, whatever you want to call it. And the market gapped up something crazy, right? And went up there and broke above that 280 resistance. Everybody been waiting on that 280 resistance. Not only did it break above it, it crushed it and went all above even 281, right? Got up there near 281.25, somewhere around there. And that's when okay, party's over. Cut the lights off. Pick your little beer cans up. Your little candy wrappers, and it's time to go home. And the market just pulled back. Beautiful downside here. If you bought the puts on the intraday for the SPY, came all the way down, bounced off that closing price of Friday, 279.14. Obviously, hit it, bounced off of it, crested a little bit above 20 EMA on the 5-minute, pulled back beneath it. Obviously, let you know that sellers wasn't done for the day, and then it settled out, right around here, obviously in the after-hour session, around that closing price of the day before, right, meaning Friday. And so looking at the chart here, that shows that we may have some some possible follow through tomorrow, because the market, we still know that the market still overextended off the December lows. No matter how you look at it, whether you're super bullish or not, the market is very extended. And all this geopolitical news is obviously going to come to a head at some point, because it's starting to get baked into the day-to-day grind of the market. It can't just mash up, consistently, just on its own. It has to have, this kind of, Red Bull, whatever, every day. It's coffee mixed with Red Bull, mixed with ginseng, shot every single day. But at some point, it's going to wear off. It's going to be time to come back to reality. So that's what we're dealing with here. And some aspect of the daily here, the daily chart, how it got overextended, here, and then it had, it kind of pulled back, to reality, closing that gap from Friday, and here we are today. So it could easily find itself back down to that 278 handle tomorrow, potentially, if anything doesn't happen in the futures market tonight to warrant another bounce and kind of go back up that higher, test at 280 level and shoot a little higher. And so the gold, gold right now is doing this thing. So y'all know how this stuff works. And so again, but that's it. I'm definitely I look forward to, again, having this conversation again more in depth tomorrow when we go over the actual lessons of the how day trading worked, and also proper positioning and scaling, and how that applied. It works in reference in tandem to how we need to be trading the market, from moment over moment. And that's just it. So again, I got short around $66.77, 77, because again, hit a key level of what? Resistance. Even though I got up above 67, I waited for it to pull back. So it got above 67. I said, let's see if it's gonna break out above this 67.50 there. If it breaks that $0.50 mark, then hey, we'll see. I think I was speaking to one of our other trainers and mentors in the room, Latoya, and she was thinking about taking it long, and she missed her entry, and I was like, man, I saw it too, and I thought about it, but I was busy trading something else. I said, man, I missed it too. So I said, I'll just let it get extended, then I'll just try to ride it back down. In my mind, I was like, I'll just wait, try to ride it back down. So as soon as it hit that level of resistance, around 67, and couldn't break that 67.50, I said, you know what, here's opportunity, to get ready to take a short. And lo and behold, I saw the pullback. I got in on the pullback around 67, again, 66, 67, 77, and then I just kind of rolled it back down. I didn't see anything to kind of make me get shaken out of the trade. The SPY was already coming down too, so I played the parallel or the correlation, and lo and behold, again, it kind of came to my, into my targets and in my zone. So I'm definitely going to hold it off at this point anyway until tomorrow. I'm gonna see if it can eclipse this, the bottom of this closing, the closing of this candle here on the daily, and if it has any kind, if it opens up lower than where it's at now, I was close to the base of the previous candle that had that big gap up on, that's going to be problematic for Roku. I mean, it might can bleed down another $2-3 easily before it kind of bounces again and kind of go back up and test that that level where it's at now and go higher. All right, but that's just a quick little assessment. Nothing more in depth, but I did want to speak on that since the brother he asked about it, in essence that. So, but that's that's a part of the the assessment value of what we do. And so I hope you guys enjoy again this little impromptu session. I know it's late, like I said, you guys got family members, you got dinner, you got things to do, but again, tomorrow, look forward to tomorrow. We will have an in-depth discussion on how day trading works and also proper positioning and scalability. So tomorrow you're gonna see that same title again for some of those guys that's in the mentoring office that's going to obviously get privy to it. But we're going to break this stuff down in depth, go over this stuff. Brother JL turning in the house. That's our brother there, actually. They had that wonderful Roku opportunity. All right. So, but we're going to break this stuff down. And again, we'll come back on and maybe do like a Q&A after the fact and discuss a little bit more about the market, what we saw, throughout the intraday trading session, then, get ready for the next potential day. Again, we do still have some nice earning plays coming down the pipeline. Again, we know Etsy had earnings tonight. Also, Shake Shack, right? you know, and they're performing they perform pretty weirdly after hours, both of them, you know. But again, another conversation, we'll discuss that stuff tomorrow. But again, thank you guys for stopping by. Power and profit to you all. Uncle Johnson Neb, as I always say, you know, Ubuntu I am, because we stand beside each other, not in front, behind. We're after this thing, you know, together. You know, it's a think tank. You know, we here to utilize, you know, every aspect of our sensory, our intelligence, to make sure we can put ourselves in the best opportunity to be profitable and to win. So I thank you all, and I thank you all that came from the respective Discord rooms or maybe tuned in. That's a private, again, unlisted, you know, you know, conversation we're having now. So again, that's why the numbers are small. I didn't post it, you know, public. It's private. It's for those who felt like they had enough time to come spend and hang out. I say it that way. That's why I did it from that perspective. But either way, I thank you guys for tuning in. So, all right. So again, I see you guys tomorrow. I'll see you guys in the Discord room. I'm pretty sure you guys are going to be prepared to get after this market. And again, we're going to have fun doing it. So power and profit. As I always say, again, you know, trade safe, choose well, and stay green, my friends, right? Trade safe, choose well, and stay green, my friends, above all. Power and profit, guys. All right.